Alan, let's just start right there, that line. The bottom line, the only reason to be bearish is there is no reason to be bearish. What's your takeaway, Alan?
Well, I think the main cautionary note to the bullish equity view is really that there's good reasons to be bearish in terms of bonds. I think the fixed income story revolves around the reflation that we're going on, but also the risks are very much tilted towards excess reflation. And I'm not necessarily saying we're talking about inflation per se, because inflation is very much a lagging indicator, lags growth by about 18 months. But in terms of growth and the potential for overheating from fiscal policy, which is flat on into if we get anything close to the 1.9 trillion from Biden, money supply growth, which is the highest ever, financial conditions are as easy as we've ever had. There's something for everybody, I think, in terms of reflation.
You know, I look, Alan, at this move that we've had and the idea that we've given up worried about inflation moving up. We have been wrong. I mean, you've been doing this for 4, 5, 6 decades. Alan, I mean, we have been wrong on inflation moving higher. Why won't we be wrong again?
We might be wrong again, and you know, it's a tough call. I think we know where all the risks currently lie. As I mentioned earlier, you know, the lags are long, so we won't know whether we're right or wrong for a long period of time. But you know, when we think in terms of the things that are disinflationary, part of it just relates to the calculation. The cyclical elements will be inflationary, but we have lots of things which are not cyclical. Things like medical care, things like education. A lot of the services don't necessarily respond to higher growth. So we might not see it in the statistics, but the cyclical elements will almost certainly show some uptick.
Alan, is the reflationary trade dependent on central banks remaining this accommodative forever?
I don't think so. Look, I think the Fed clearly doesn't want to take away the punch bowl in terms of their flexible average inflation targeting regime. You know, if they're true to that, they're not going to be hiking rates for this year. They're not going to be hiking rates next year. Probably only hike in 2023. So, you know, I think in that sense, there are not a huge amount of risks. I think the bigger issue is what the market does and what the bond market does. So the market is going to tighten for the Fed to some extent. And I think that's going to constrain some of the bullions that we're seeing in risky assets.
Well,